Okay, we are now recording. I cannot answer any questions for now, and you are welcome. I welcome you to the iMarkets Live Night Owl, and we're recording this. It's November 15th at 8:09 p.m. And once the recording is complete, we'll send it out to everybody in iMarkets Live. This Night Owl is actually, it's interesting because back in the 90s, 1989 to 1996, 97, I was in Amway. I was in network marketing. And I was fortunate to, every time they opened up a new country, I would just fly and stay there for a month. And the leaders, the diamonds, the emeralds in our organizations that I was attached to, they would do what's called a night owl. This is up in New York. So we'd have our opportunity meeting or our um, trainings. It was Mondays or Thursday, the open meetings or the Thursday trainings, team meetings they called them. We would do a night owl afterwards, and the Emeralds or Diamonds would teach. And we'd go to a diner, we'd eat, and it's late at night, and then they would start teaching. And that's where all the gold nuggets came from. So I had launched a company with my mentor back in 1998, 99, trading mentor, Linda Bradford Rashke, and she had changed my life with trading because I found I can compound money faster than people. I just can. And, well, at least in Amway, right? Uh, but we ended up doing these training sessions around 2003, 2004. I don't remember the exact year, but on Sunday nights, I started doing a training at night, and I called them the Night Owls. And I did that up until around 2012. And I had retired in around January 2013. I just wanted to take a break, you know. I wanted to do something different. So I did those night owls up until that point. And with iMarkets Live, I never really got started with them. I just never did them again. And it wasn't too long ago that one of my old members had come back, or he found me on the internet. He come back, he signed up with iMarkets Live, and he said to me, "Still doing the night owls?" I'm like, no, you know. So I thought, why not? Why not do the night owls? Because we got some phenomenal products. I mean, the old days, we had the live trading room, we had a signal alert to it, and now we have the live hands-free trading, we have robotic stuff, we have the scanner, we have the live room. So I thought, you know what, let's do the night owls. And we'll do them Sunday nights, 8 o'clock on. I don't hold a particular time. I never did. I don't like being confined. And it's been a hit. So tonight, what we're going to do, tonight is not for the basics. You can go and get on our website. You can look up the basics. Tonight, all the night owls are advanced trainings. If you want basics, we do that a lot in our live trading room, 8:30 a.m. Monday through Friday through around 12 o'clock p.m. And this is Eastern Standard Time. So if you have the time, you plug in. We do Forex between 8:30 a.m. and 9:30 a.m., similar to what we're doing now. And we also give trades if we see them, when we see them. And then from 9:30 a.m. to 10:30, we do futures trading. If you don't know what that is, you're missing the boat on trading itself. I know one of our guys here, Wallace Farragamo, and many others are plugged into our live trading and educational room, and they're eating every day on a heavy level. So if you can, I'm not saying take a day off at work, but I'm also saying maybe you don't feel good one day and you want to show up and see what we're doing, and it'll give you a hint of what's to come in your future. So the live trading and educational room is valuable. From 10:30 till 12 o'clock, we have education. We do classes. I do a lot of basics, but the night owls are advanced technical analysis. They are advanced. We're going to start off with the scanner. We're going to show some patterns. We also want to do a little bit on entry technique. For me, it's always about the entry technique. I don't care. You can have the best pattern in the world, but where do you enter? You know, the best chart pattern. You see, the 4-hour chart could have a pattern, but where do you enter? You know, you're going to put a daily risk on it? You know, that's crazy. So I want to show you how you can utilize what we're doing and just lower your risk and also just identify how to enter. I mean, think about it. You know, just hypothetically, um, you know, let's just say this right here was a short, you know, and you get stopped out and then the market goes, I mean, it was a long and you buy it and the market stops you out and goes your way. Uh, Look, you know, there's no rush to do anything. There's no rush to get into any trades. All right. No rush ever. If you miss something, big deal. Big deal. The market's full of opportunity. When I first started trading back in 1994, I believe it was, and I was reaching out to mentors and I eventually, you know, this is when the internet was starting. I I had reached in that mid uh, 96, 97, and a girl, her name was La Grapu, I don't know, Michelle, and she said to me, and she had like an AOL name, and I'll never forget her saying, there is an opportunity every single minute of the day. Don't force anything. And it's the truth. You don't have to. So let me fix my little trusty, what do you call it here? Let's take a look what's going on in the markets today. Let's take a look at what's happening right now with our scanner. What we're going to do with the scanner is I'm going to be really getting rid of some of this extra junk over here. We don't need all this stuff, right? Looks like I did some chart work on Friday what they were showing the people on our team. Okay, looks like we're pretty much cleaned up. This is a daily chart of the EURGBP. Now, this chart right here is basically saying that you have, and those of you that haven't used our scanner, let me just go through it real quick, okay? So you understand. I know a lot of, listen, this thing's went viral. It went viral 3 freaking times. And, you know, it's important that you plug in and you just learn. So the way I designed this, I didn't design it to sell it. I designed it actually for myself when I was doing the trade signals, but ended up creating it for iMarkets Live. So what I like, and I designed it for myself, of what would be useful to me, is right here, the available patterns. Then it would tell me the pattern, the time frame, I mean the symbol, the time frame, the pattern, and when did it happen. To me, it's important. When did it happen? That's all I want to know. Right here, it looks at the pattern, the symbol, the time frame, and then all these little ratios that go into the pattern. You have X, A, B, C, D, and it's basically given us what these coordinates should be. Now, the entry zone, it gives us our zone to enter. It gives us the risk on the trades. It gives us the targets. It gives me the size of the account. This is a demo account. And it also gives us the risk, 1%, 2%, and 3% risk. So for instance, if I wanted to trade this, it would start, this would be the zone to enter. And I'm looking at entering 2 lots here and these 0.02 down here with the risk all the way down here. But the question is, what if this EURGBP never gets down to this area? What do? Do you just let it go? Or do you say to yourself that this has uh, created a pattern as it is and it's falling short? It's falling short. But what if this market wants to run higher? You miss all this opportunity? I think not. I think we have to look at all opportunities. So what I like to do, I'm just working around my pen here, so just forgive me. I like to look at the lower time frame. I'll take a look at the hourly chart, see what's happening here. I like doing that. So you have a daily chart. I like bringing it down to the hourly chart. And I start looking at what is happening in this particular chart. Let me just get rid of. You know, one thing about MetaTrader 4, it's weird. It's a weird thing. All right. So what this is telling me here on the EURGBP is here's support. All this is support. You see that? And the market did this. 1, 2, 3. You see that? 1, 2, 3. A lot of times when you get that, this 1, 2, 3 drives down, that actually ends the trade, the trend. It actually ends it. So if you look at that as the market went 1, 2, 3, up, down, up. So I'm looking at risk down here. So would you think that it's okay to take a trade and put a little bit of risk on the table? Sure, why not? So where's your risk going to be? All right, you want to take a trade, you have 30, let's just say you have about 45, 46 pips of risk, okay? Let's just think about that. You have 46 pips of risk and you want to buy this area. So what trade size do you use? Let's just say 2%. You have 50 pips of risk and you have $1,000 account, okay? You have $1,000 account and you want to risk 2%, which means that you want to risk 20 bucks. So 20 bucks times 0.04 micros equal, right? 50 pips times 0.04, it's 20 bucks. So if you want to trade this down here and you want to risk 20 bucks, 2% on your account, fine. Right here, you can buy the EURGBP. You put a 50 pip risk. You have 2%. That's a dollar sign, right? So you have 2%, $20 per 1,000. Now, I know it's not sexy, but you know what? You'll stay in the game forever. If you want to do more risk, that's fine. I can't sit and legitimately tell you to risk 10 and 20% like I see how some of you guys, well, not you, maybe some other people, you do so much margin leverage that a wrong trade will blow you up. I don't particularly believe in that. I think if you need to trade so much size to make a normal profit, that's telling you, it's an indication that your account needs to be larger. So, you know, it's up to you. Put a little bit of money every time you get it. Keep feeding your account. Keep feeding your account. Put money into your account and treat that account as a baby. You don't want to treat this as a casino. I live in Las Vegas. I live in one of the resorts, one of the 5-star freaking resort. I go downstairs. It's Sunday. It's 3 o'clock in the morning. You got these gamblers. You know, I don't want you to do that. I don't want you to sit there feeling that this is a game. I want you to be in it long term. All right? I want you to eat long term. Chris has been eating long term. Why can't you? I've been doing this 20 years. Why can't you? Some of you guys, you want to get that get rich quick feeling, don't do it. All right? Stay out of trouble. So, EURGBP. I just shown you how you could take a daily chart pattern. Once it's showing a buy on the smaller time frame, you could work a buy and you're only keeping a 2% risk. So what if it stomps you out? You don't get hurt. But if this thing starts to take off, guess what? You're in the money. You let it run. It's such a high time frame. So small time frame, entry within a big time frame structure. All right, I'm playing with my tool here. I'm getting used to it. What do we got here? The EURJPY. EURJPY. Let's take a look at this right here. Now, was that me that put that right there? That was me. Okay. It's probably me. I don't even know how to get rid of either. Okay. EURJPY. Here we go. All right. So what we're seeing on the EURJPY, it's a 4-hour chart. This chart went into the zone, into the trading zone. See it down here? All right, we're going to go through our entry techniques also, which I just did one of them. Look at this right here. See that? I'm going to explain what this whole thing is in a minute. I'm going to explain everything. What you're seeing, this is good that we're looking at this because you're going to learn a little bit. All right, so give me my pen. All right, market went into the zone, into the entry zone for the EURJPY. Now, right here, this whole area, this created what's called value. Market does something like this. All right, when the markets move big, they tend to look to go into value and create patterns before continuation or reversal. So you have a large move, and same thing you see here. You see it all the time. Here, value area is created. Here, value area is created. Here, market goes into value. All right. Here, value. You see? You don't think you see it, but here it is. Here's more. Here's more. So the market goes into what we call value. It goes into this, what they call a market profile. So typically you will have, the market will do something like this. Let's just say it goes up into a zone and then starts to create this range. Okay. And in the middle of this range is called the point of control. Here's your upper value, lower value. A lot of times you may see this, right? You may see this where the market will come out of value and then chop right back up in the other direction. I know there's somebody who teaches that stuff where basically the market will come out of a range to the downside, go up, do this, and come back. That's normally what the market would do. You have to understand, if you understand why it does that, there's no, right here, there's no market makers looking at you at the high and low. It's basically all of the market participants looking and letting the market decide what it wants to do. Everybody's looking at it this way, right here. Same here. Everybody is looking at the market and they're jockeying for position, long or short. And essentially, when one side breaks, it's similar to like a tug of war. Here's your water, okay? Here's the little ball, here's the rope, all right? Like that. And here's your land, and here's all the people on each side holding the rope. So this ball, you have to think about it, goes back and forth, back and forth, back and forth until one side breaks it. Same thing here. The ball goes back and forth, back and forth, back and forth until one side breaks it. And that's what we call value right here. This is the point of control. This is the point of control. So if you don't understand this, don't worry about it. I'm just giving you a little bit of slight education of stuff to come, but of what you see here. So the market went down, hit our level of entry, technically, and is now jumping up. What we want to do is go down to the lower time frame, erase all this noise, and we want to go down to the lower time frame. Higher time frame, lower time frame. I talked about this in the email that we sent out. We have what's called the butterfly pattern. The butterfly pattern was developed by a guy named Bryce Gilmore. Bryce Gilmore and Larry Pesavento are friends. Larry Pesavento was the originator of the Gartley pattern. His student was Scott Carney, who's a fine gentleman. Scott went on to put other structure around the crabs and all the sharks and all that. But Bryce Gilmore, and I want to give you a little history so you understand a little bit more about harmonics. And don't worry about the charts, guys. We got so much stuff to go into. Don't worry about it. Bryce Gilmore decided that this pattern here, this XABCD, all the everything aligned, XABCD, and all these ratios aligned, and that created that butterfly pattern, which was a derivative of the Gartley. Now, what's important is that Bryce was one of the first, him and Larry Preservento, but Bryce was huge into market geometry. I do a lot with market geometry. A lot with market geometry, and I suggested you take market geometry and you include it with harmonic patterns. You're talking Elliott wave, price relationships. I mean, the guy was just a genius. He's retired now, but I was personally mentored by him. I've been to his seminars. I've been to his place out in Australia. I'm a guy that's very aggressive to learn from the best, and it cost me a lot of money, but I'm passing the value on to you that the XABCD type of work, which I'm going to do a class this week on market geometry, directly works with the harmonics. So just so you know who the inventor was of the butterfly pattern, let's get and take a look at the smaller time frame now. It's real important. High time frame, small time frame. Let's see what is given to us. Right now there's nothing. Let's go down to an even lower time frame. Here's my interpretation of what I see. Here's what I see. Here's what I feel. You got around, let's see here. I'll say 136, 130, 131.3. You got about 70 pips. All right, 70, 80 pips. You want 2% risk, 20 bucks. All right, if you're using 20 bucks per thousand. All right, so you're looking at maybe, let's take a look here, 28, 80. Let me see what kind of risk, 100. 2 micros, you're looking at about maybe 3 micros per thousand. All right, and your risk would be down here. 3 micros per thousand would give you 2% risk. Now you could risk more, if it's up to you. I'm just giving you the basics, okay? You could buy partials here, okay? You could buy maybe 1 or 2 there. If it goes lower, buy again, and put your stops down here. Now, this is, the market entry was down here. We know that already, or down here somewhere. But this is showing rejection off those lows. Maybe get a push down and a trade back up. Most important, what you want to see, and I have to get off the pen mode here. All right, obviously I have to get off the total pen mode. Okay. What you want is to get back above this line. You see how this low market was tested? Real important. You want to see that this pattern gets back up into that zone. All right, so you can start buying anywhere down here. There's nothing wrong with throwing some money at the markets down here, because you could take a low risk, enter it, put your risk down at the bottom at 130, say 0.6, and get away with it. Big deal. If it stops you out, you risk 2%. It doesn't matter if it's 80 pips. Forget the pip size, okay? Percentage of your account is more important. So right down here, you can start buying into this. Your goal is to get this market right back above this 131.4, 131.450, whatever it is here. You want to get back above there, all right? So this push down is getting you into the market. You could add as it goes down according to your account size and what you see, but I would like to see it get above here. Once it gets above there, guys, take a look. Okay, this is all that value area we were talking about, right? That's all that sideways line, sideways value. Here's the trick, all right? We call this a fake out, a fake out breakout. And I'm recording everything, so don't worry about it, okay? Market breaks out to the downside, fakes it, comes back into the box and out the other side. You see this a lot. This may do this though. This may come down and then up, but sideways line eventually leads to breakout. If you get a rejection and it comes back into this range, if it fails one side of the box, it's going to come out the other side of the box here. This is that point of control. This is where it should eventually come back to, because that's the mean, the middle. This is the mean of everything. This is right here. So this market should make itself back to the middle. So what did we just learn? The market goes sideways, breaks out. If it fakes it and comes back through the bottom of that box to the upside, your first area to watch is here. Then you're looking for a breakout to the upside. Okay, entry techniques on the harmonic scanner. Let me look for another pattern, and let's take a look at what else we could find here. CAD. You know what? Here's a perfect example of a pattern of how I like to also look at the markets. All right, let's just take a look at this example. Market went up and it gave you, I'm sure on a smaller time frame you would have this. Actually, no, it's not a perfect example. I apologize. It's not a perfect example. All right, that I apologize. Let's take a look here. Let's take a look here. Sometimes they just don't give you that perfect example. All right, what you can look at here is essentially the market, and it is actually a perfect example. You had two zones to work in this particular pattern. What I like is to see the market, it'll go up, it'll hit, it'll back off, it'll come up and put a lower high before going down. So if you look at this here, the market went, it broke to the downside, came up again, put a lower high. Unfortunately, that's where all the targets and everything was. It just happens that way. But here is your risk point. All right, the market basically said, I went up enough, came down, and chopped back up. Let's erase all these drawings and look again. Let me see if I can bring this to a lower time frame. And we'll look at the other charts. I got a lot of work we're going to look at tonight. We're going to look at quite a bit. So, market went down, market put a lower high. Here was that entry. Here was that risk point now. See that? That becomes your risk point. Lower high. And why do I look for that? All right, I look for it because if we look at, for instance, an Elliott wave, it starts at the bottom, it goes 1, 0 to 1, 1 to 2, 2 to 3, 3 to 4, 4 to 5. Same thing at the high, it goes 0 to 1, 1 to 2, 2 to 3, 3 to 4, 4 to 5. That's an Elliott wave. 0 to 1, 1 to 2, 2 to 3, 3 to 4, 4 to 5. You see the thinking of how I'm mentally laying this out all the time? I love these lower highs. I love the higher lows in the market. Here, watch. 0 to 1, 1 to 2, 2 to 3, 3 to 4, 4 to 5. You see that? You don't realize it, but it's here right in front of you. You just have to start looking at that's the structure. 0 to 1, 1 to 2. All right, 0 to 1, 1 to 2. I like higher lows. I like lower highs. That's just how I always play the game. I love it. Because once you put that higher low down here, or that lower high up here, your risk is defined to its prior high. You don't have to say to yourself, well, I'm shorting here because it says short, and I don't know, I'm going to short more because I should, and then you go up and get blown out, then it goes your way. I'd rather you let the market stop. It's going up. I'd like to let the market stop, let it come off. Let it show a lower high. Let it reverse. Like that. Here. Okay? What the harmonic scanner does, it puts you into some of these trades. All right? It puts you into some of these trades. It's defining, here's your risk point now. Your D, the market failed against that. You could risk against that. You don't need to risk all the way up here, and you don't need to sell this whole thing going up. What if you were selling this whole thing going up? Right here. What if you're selling this whole thing? You can get hurt. I'm not saying you have to do that. I'm giving an alternate example. I know you have your own way of doing things, but if you're newer, sure, try it. It works. All right? Right? All right. So here we're watching, let me see here. All right, so let's do this. Let's go and get up some other charts, and we'll start working. The GBPUSD, I'm going to erase all this, and I'm going to go over what we talked about on Friday in our live trading room. So I gave you some information on the scanner, along with entry techniques. If you didn't understand it all, just watch the video once we complete everything. So I'm interested in the GBPUSD. Let's take off all of our indicators tonight. Let's just use the raw chart and do some raw basic charting. All right. So we're going to go through some charts tonight. And I appreciate everybody coming to our night owl. We have a phenomenal group. Guys, I appreciate you. Listen, I'm going to do this free every Sunday night. Invite your friends, those of you guys that are part of iMarkets Live. Being open with you, I'm transparent. Use this as one of your tools for marketing to share and show the quality of type of work we do. There's nothing to hide. We have a phenomenal set of tools in our company. Before we do that, let's just take another peek at another product. I know a lot of people may not even know we have this stuff. You know, listen, guys, I've never been the greatest marketer in the world. I just know how to build things that work, and I just do. I like to help, but I'm not the guy to go out and just try to sell everything. Those of you guys, so you know, and I've been asked a million things with this FX Signals Live. Let me explain what we have, and that way we can get going with our charts. Social wall. See this? Social wall. Social wall is basically a Facebook type of wall for our members. When you go inside, when you log in with your username and password, and here's your login right there. All right. When you go in there, you'll have the ability to type and put information here. And we keeping it real. Listen, we don't want negatives. People start posting negatives, you're out. Okay. We keep it positive. Our goal is to help everybody, not hurt anybody. Not like it's not a Facebook wall where you can post negative. We want to encourage helping each other. Put your charts there, whatever you love. We have the traders area, so you understand what we're doing. So you understand what we're doing with iMarkets Live. And I'm not going to get into this right now. We have videos for that. I plan to have traders lined up, and it's coming. I got different signal providers I'm working out the deals with. Everybody wants a different set of money to be part of what we're doing, and I'm working it all out. All right, this provider has been trading for a while, and he's been doing phenomenal. Over a period of time, he's growing his account, and we've locked arms with them. All right, so however you want to call it there, we got the first guy up, and what we're going to do with the rest of them is as we get them, we'll upload the data, and you'll have all the information here, so you'll be able to show everybody. The live trading room here, when you log in, let me just log in and show you real quick, so you see what we're doing. So here's your Facebook type of environment. You see how it opens up real nice. You have your traders area. Very simple to set up an account. All right, I was doing some demos to show everybody. Very, very, very simple. Live trading room. You click on this, you go right in, and a software pops up. You download it, and you get to be with us 8:30 in the morning Eastern to 12 o'clock Eastern, Monday through Friday. We look at charts, we look at trades, we go crazy with this thing. It's absolutely amazing. So let's do that. Let's just get rid of this FX Signals Live. We'll worry about that later on. More important, guys, I want to start looking at some charts. Here we have the pound sterling, the GBPUSD, and what we see is the market's been given some efforts. Every time it makes a lower high, makes a lower low, got a bounce here, maybe trying to test down again. The way I look at things, and I look at many different ways, I look at prior swing relationships. I look at what's called an A to B, C to D. I look at price relationship Fibonacci clusters, and I'm going to go through an example real quick, It's a real example. It's not an example. What we're looking at right now, we did this on Friday for our live trading room. I look at the past and I look at swing highs and swing lows of prior swings. All right. I'm using TradingView. I love using it for my stuff here. Okay. Well, let's just go right here. Okay. Right here is your, let me just get this trend line. Here we go, just like that. All right, so what I'm looking at is potential. I take this swing, right click, you can clone it, and you draw it right over. You draw it right over. I like looking at prior swings up and down. I then take the format and I look at an 886, 100%. So I got 786, 886, 100%. Real quick, so you understand where all that came from. All right, you have a 6.18% right here. I just have my own rounding it off. 0.618%, or 62, whatever it is. A derivative of that, which is square root of 618, is 786. The square root of that is 886. And then you have inverses of 786. If I took 1 and divided by 786, I got a 1272. If I took 1 and divided by 886, I got a 113. A 113. So there's different derivatives of everything. What we did was we looked at this zone on Friday in our live trading room here, and the market was trading into the zone, and we talked about shorting because of the risk is low. What we're doing right now is we like the short side on the GBPUSD, and I'll explain more, but we like the short side. Okay, and I'll show you the targets. But to establish it, let's just type it in here. So we took an A. I want you to learn about A to B. That's right, I'm bringing it back to school. Back to school. Okay, call your kids and go, I've learned my ABCs. All right, A to B, C to D. Real important to learn your A to B, C to D. All right, very, very, very important. What you're looking at is prior swings in the market. Prior swings in the market. Since this has been in a downtrending environment, you want to continue to look at relationships from the past swing highs, past swing lows. We put our relationship in here. Just because it doesn't hit 100%, that's okay. You see how this is finding resistance at the 786 to 886. Then I take B down to C, okay, and I look at a retracement. Let's get rid of, can't do that. Yep, let's get rid of 786. Let's get rid of that. Let's see where the 50% line goes in there. Let's see where the 38% line goes in there. Okay, so you see where it's in the 38 to 50% zone. All right, we like to look at that. Then we could look at little lower highs in the market. For instance, clone. Come down here. You go to swing high. We're going to format. You get rid of the 38%. All right. Oops, I'm sorry. 38%. Yep, get rid of 38%. And we leave the 50, okay? Here, this one right here, if we think about it, we can get rid of the 38%. All right, it's lonely. So what we do is I'm establishing, I like the short side, I'm establishing the fact that you have what's called the commonality area. I'm taking retracements from swing highs and swing lows. We're cloning it again, coming right down to the lows. All right, and you see how that 50% line, all right, we got that. Okay, let's go down here. And let's get rid of the 50. Let's look at the 618. See the 618? Bang, right up in there. All I'm doing now is I'm looking at commonality zones from these prior swing highs. High to low, lower high to low, lower, lower high to low. I'm looking at all these zones. What was most important and most evident, if you can see, okay? All right, I like the short side, guys. The short side should be fine. You could risk up here 1.266. You got 66 ticks of risk. We liked it up here, but still, I'm still sure it can go down. You keep a tight stop, I mean a small risk of 2%, you're fine. Now, I want you to see what we have. Let's take a look. All right. What do we typically talk about in our live education and in our night owls, okay? I like to look at Elliott wave. A lot of people tell me, oh, Elliott wave is just a theory. Oh my gosh. You know what? You need to read your books again. You always want to know what part of the wave you're in. Always, right? And we know everything ends with 5, the 5th, and sometimes it goes 7. But if I was to take the low and go up and take that pullback and then rally, then take that pullback again and rally, I've completed that move up. That A to B, C to D relationship was completed because you have smaller time frame within this zone, within this swing. The smaller time frame completed. You see that? A to B, C to D, but that C to D leg had a 5 wave. The 5 wave completed itself up, and that's why it stopped going up. It went right into the zone of resistance, and now you could feel comfortable that this market wants to go lower. But I want you to also recognize that in Elliott, you always want to make sure, okay, that the number 4 doesn't surpass the number 1. That's one of the key ingredients. Sorry for a hiccup. If it passes there, you don't want it. But that's also a spot when you take a trade. When traders look at the market to buy, for instance, here pulls back, you could buy and put your risk down here. Here, when you pull back and you buy it, you could put your risk in here and feel real safe about that. The place most traders trade is here, because by the time it gets here, they're so late to the game. That's why they don't get continuation, and they're sitting in the trade waiting for it to go up. You know, when in fact the most best opportunity is here or here. And most traders, I'm sorry to say, I'm not saying that you're most traders, because now you're with me and you're part of my family, and I'm never going to let you do what the rest of the people do, right? Trust me, know that. It's never going to happen. You sit in my night owls, you sit in my live room, you're on the right side of the market. You're not going to be this guy. You're going to be this guy, or you're going to be this guy, all right? Low risk, always. You want to define where you are in the range, in the trend, okay? I'm trying to break this down a little bit simpler than I did last week to make sure we're all on the same page, and that I'm not going so fast that I'm going over people's heads, because I understand, you know, it's new, but if it's new and it feels good, come back next week. Come back in the room tomorrow morning at 8:30. Come back Tuesday. Come back Wednesday, Thursday, Friday. Come back week after week after week until you get it. I don't want you putting money in the market until you actually get it. I hear so many people, I got money to put in the market. You're not in a casino. Show me what you've done on the demo. Show me what you've done on a demo. Seriously. I have a guy tonight, after we finish tonight, I have to go meet him. He has a long history, a track record of success in network marketing. He's an executive of another company that he's flown in. We're going to sit and we're going to talk. He has a track record. I don't have to sit and show me your track record. He has one. You're new in trading. Don't throw money in the markets. Don't just be, it's not a casino. All right? Win on a demo, and don't be embarrassed to use a demo. When I first got in the markets, 8 months, 9 months, demo, paper trading. I'd rather you make your mistakes on demo accounts than go real. I have people in my live room that go in there, they'll drop $5,000, they'll lose $1,000, $2,000 right away because they're putting the wrong size. They're going the wrong way. They're making errors. Why? Why do you need to be in such a rush? Please, take your time. This is no joke. If you want, listen, if you want to get some benefits on blowing your money, come to Vegas. Come right here to one of the hotels. Man, you get yourself a card, they'll rate you. You drop money in the markets, they'll give you drinks, and they'll give you a taxi ride home. For you dropping $10,000, they'll give you a limo ride up the block, a $30 limo ride. Congratulations. Take your time. Take your time. I don't want you losing money. EURUSD, let's take a look at it. Okay. Oh, I'm sorry. I'm not going to leave you hanging. But Chris, where's the targets? Don't worry about it. I got you here. Oh, wait a second. Oh, man, I'm making a mess. Check me out. All right. What you want with the GBPUSD? I'm sorry. I didn't mean to do that, okay? Not going to leave you hanging. Okay, target number one is 38% for my guys in the room. And those of you that have been playing it right now, target one, 38%. All right. Target two, 62%. If you're doing multiples and you want to ride them, target three is down here. I don't particularly think they're going to go all the way down here. What I feel can happen, guys, is this market can do one of these things. All right. Let me see here. Did you like that? Like weird noise? It's okay. Don't worry about it. Okay. Here, I think the market can come deep down like this, come up again. All right. So I don't want you to push in for lows. I want you looking at 38 to 62. Take the money out. If it runs up here again, then we can go after it and play it. You had a 50% retracement from high low up 50%. Look for a higher low. Look for another swing up. All right. And this would be considered a bat pattern. So plenty of time. Let's see how it plays out. You can trail your stops as the markets move lower. I just don't want to see you get hurt and not have a roadmap. All right. Okay. I don't even know what this is, quite honestly. I don't even know what we had here. So I'm just going to remove all this stuff. Oh, okay. All right. If you've been part of our live trading room, if you've been part of our night owls, back in, I don't know when that was, middle of October, we had looked at the short side and the reasons why. Let me just fix this. The reasons why. I'm not saying we're short now. I just said we had looked back there. Okay. All right. Let's go through. Market had a high up. That lower high. Remember, I love the lower highs because you can define your risk point. And that leads you to those bigger moves. You see that? That lower high leads you to the much bigger moves. That's where all the big traders trade. I'm giving you a hint, okay? 3, 4, 5, and then it went down to 7. You had your large A, B, C corrective wave. Okay, I'm bringing it into the future here, okay? Market dropped down, it put that lower high, which we always like. Market went down, came back up, put that lower high again, which we like, all right? Which we were talking about trading at the time on the short side. That led to that 2 to 3 wave that's happening right now. Now, let me fix this and come up here and bring you into what's going on right now. Let's take this, remove that, and let's remove this. Okay, this is what we have right now. That's what we're looking at. What we know is that the market, because it's in a big downtrend, hit the low, made it A, B, C corrective wave. What we want to do now is determine what to do with the EURUSD. And believe me, you got people down here going, this is a bottom. It's a bottom, or shorting them. I'm just going to sip my water and watch you lose. So we don't want you to do that. All right. So let's take a moment and see what kind of questions we got. Okay. You guys happy? I put the little screen up here. You got about 100 of us up here. You guys okay? We're all on the same page. We're cool. We're having fun already. All right. We're cool. All right. Guess not. Are we? They'll let me know. So here we have, I know I get everybody asking like immediately, what's going on? So high, that's 0 to 1, 1 to 2, 2 to 3. This should come all the way down here, 3 to 4, 4 to 5. This is what you're road mapping out into the future. Okay, this is what the structure is telling us that's going to happen going forward, okay? Okay, that is the structure, what the market is. Hey, Adam, what's going on? So the market is giving us this structure, a roadmap. Remember, we liked shorting into lower highs. You want to catch that 0, 1, 2 for the bigger move. Now you have to roadmap that out. But we also know within this swing what's going to happen. You're going to have a different type. You're going to have this. It's not going to work out exactly like that, but you want to, in your mind, put a roadmap of what you're dealing with. You don't just want to throw money at the market. We'll call this an intermediate, okay? All right, so you have the primary wave, you have the intermediate waves. Okay, so higher time frame, 0, 1, 2, 3. So right now, where are we? We're in the middle of the primary trend going from 2 to 3 on the EURUSD. What are we looking for? We're looking for some kind of correction up. Maybe it gets a correction. Maybe this ends up being the correction. We don't know yet. But we're watching for that correction up and then a continuation lower. Right now it's creeping lower on the daily. It's creeping. And quite honestly, that's the worst type of market to trade because it'll keep creeping and creeping and creeping, and people are buying and buying, and it'll end with a climax. Those are worst type of markets, man. Those are the toughest. So shorter term time frame, you can knock this down. Okay, we can knock this down to an hourly chart, and let's see what's going on here. Nothing's going on there. Look at that. Okay. So now we see the trend. All right, we see the trend, what's happening here. You're continuously just creeping down. I remember we talked about earlier that value, okay? The value. What's happening here? The market's creating value. Remember that. It creates value. Once it breaks out of this, this can continue and go. Right here, you can just see how the market hits, backs off. It's all about creating value. The market wants to rest, create value, and continue. Market breaks down, right? It rests, it creates that little value area and breaks. I know this was done on some Fed news or whatever, non-farm payrolls. I don't even know what it was. It doesn't matter, right? Point is, market goes sideways, rests, continues. Markets has been very choppy since that I think it was a non-farm. It's just been very, very choppy since. And now it's possibly picking a direction to continue. Hardest type of markets to trade when you have these higher time frames, when they're in that creeper mode, you know. So right now, I don't see anything that's telling us to buy or sell immediately right here. It doesn't. I think this market needs a little bit more time. I think it needs to retrace, give us better opportunity. Okay, we're not going to mess around with that no more. Let's look at the NZDUSD. Look at the pairs. Okay. We talked about this last week. Set my charts. We talked about it last week, right? Right now, this is in the process of a downtrending environment on the NZDUSD. We're coming off of a range, and you guys remember this if you were there. We were like in this whole short area. If not, don't worry about it. The point is I left that up there just to show you the direction that we're expecting this to go. What you're looking at, let's see if we can go down to maybe a 4-hour chart. And let's look at the range. Let's look at the trend. All right. Oops. All right, don't worry about that. So, okay. A little tricky here with this trend, this trading view. It's a little bit tricky to work with. 0 to 1, 1 to 2. This is not a valid 3. I think at some point you'll have a 3, maybe down here. All right. And once that retraces, this can't be a valid, it overlapped. So we're still in that downtrending mode. And at some point we'll get another wave up and a continuation. All we're doing right now is just you're in that continuation. What you do see, and let's just remove all the stuff off the charts, okay? Let's just remove all the chart drawings. Let's identify what's going on right now. How do you identify a trend? How do you identify a trend? A trend is lower lows, lower highs, lower lows, okay? We're identifying a trend right now. Every time the market went down, made a low. Every time it went up, made a lower high. Made a low, lower high. Low, lower high. Low, lower high. The trends, the Dow theory, the Dow theory, which is the basis for technical analysis, basically said a trend will stay in effect until such time as a trend is definitely signaled. This is in a downtrending market and nothing's saying that this is going to reverse. There's no reversal pattern. Right here, we still have what? Yeah, that value area. Okay, the markets go into value before they continue. All right, oops. So I'm expecting this to continue lower. I don't see any particular patterns here. But I would say if the market does run up equivalent of what you have here, you could look for resistance. So let's just take a little picture and take a little spot. Okay, so a couple things. Number one, let's take the NZDUSD. I'll set you up and look for spots to watch. We obviously see at the bottom here, you have horizontal pattern there, horizontal there, horizontal right in the middle. This is value area. See all this? This is all value, okay? Most of the action happened right down here. So what we're going to do is we're going to do this. Oh, geez. Okay, hold on a second. Surround yourself around the middle. That's where all the action has happened. That's what's considered value, all right? Point of control. as a point of control. You see how markets expand away from it. When they come back, this is going to be a definite spot to watch. Okay, market basically has this on its sights. Make no mistake about it. That's where it's going to want to go. What you're looking at now, setting up for the week, the next couple of days. All right. So let's take a look at the last swing. Let's take a look. So I give you two spots to watch. Okay, swing up here. If you look at the prior swing, you see the relationship. Markets like relationships, right? So if I was just to put one more here. Okay, let's just say the market rallied. I'm going to show you NZDUSD where you want to look for support and resistance, okay? All right, NZDUSD, if the market gets up to 0.664 to 0.669, that's a resistance for a short. Here, should the market come down to this area, let's take a look. It looks like a 786 to 886 down there. Okay. Pretty much right down here. So, should this market, the NZDUSD, have another whole trade down to the 0.637 to 0.63, you're looking to buy this down here, okay? Get a link, pop it into the room. It's not allowing me to pop it in the room. Pop it like it's hot, drop it like it's hot. Okay, here. Oh my gosh, freaking bogus program over here, man. All right, try this again. Here, here. There we go. All right, so at least you have something you can look at going forward with the NZD USD. So any rallies up, shorts, pushes down here, buys. Let's continue. USDCAD. Okay, we looked at, let me just erase all this stuff. Okay, let me just get this on a daily chart. I'm going to get this on a 1 hour chart. Okay, we talked about this in our live chat last time. All right, we had this area. Sorry about that. Right here is the middle of that value, okay? That value area. The value is established, and how that's established is you take here. This is short. This market's a short, okay? All right, you take 70%, around 30% to 70%. Let me just go here, okay? Here, 30%, 0.3, 8.7. Okay, see that area? Value area is established. 70% of a range. You see all the information here. In here you have your point of control. So market broke out of the value, broke down, failed that box, came back up into it. You see that failure, back up into it. And now it's up in this funky range up here. Funky range. It's trying to fake out people to the upside. Essentially, you could just see it's trying to fake out everybody to the upside. So what you're looking for, and let me just put the retracement here. I can't believe somebody's trying to call me on my phone. You know, I got people calling me on Facebook. Guys, I'm done with Facebook. I can't do it no more. I got people calling me in the middle of the night because they friend me. They think they're my friend. They call me in the middle of the night on Facebook. My phone rings. I answer it, and they're like, hey, I want to talk to you about the markets. I don't know you. I got people putting words in my mouth. You know, it's just weird. So I'm done with Facebook. My friends who are offline, I'll reach out to you. Those of you guys in the markets with me, Sunday nights, we have the week, every day. I'll do my Periscope, but Facebook has gotten out of control where I have people literally blowing me up. And I get a call yesterday. It's the middle of the night. I'm chilling out, and I get a call on my Facebook. So I yap it in my ear. I need you to help me. And I'm saying to myself, now, if I tell the person no, I'm the worst guy in the world. If I do help him, then he thinks he could do this all the time. He tells his friends. So I'm in a lose-lose situation on Facebook, being straight with you. So I'm just taking it down. I can't do it anymore. My job is to protect my members. And if that means taking it down and taking pictures of my dog Ronnie and putting up a little Facebook for her, which I'm going to do, I'll do it. You know, I just do not want to have anybody in my company have nonsense because of me. And that's that. So we're cool. No problem. And you could subscribe to the business Facebook, I guess. But our company's large, except that the younger generation, which we've tapped into, and I thank God for Ryan DeFrontis and Garrett and Arslan and Adam and Daniel and Peter. I mean, I got so many guys. I mean, just I love each and every one of you. But the last thing I'm going to do is screw you up. So we'll get off of Facebook, and I'm not going to have people call me in the middle of the night no more. I mean, it's happening a lot. I mean, it's a lot. It's to the point where can't do it. You know what? You know, so right here in the USDCAD, what we did was, let me put all the numbers in here. So this is considered, this is an A, hello A, like the fonts, A, B, not that, B, C, okay? This is basically an ABC retracement. That's all it is. What we're looking for this to do afterwards, should a lower high be formed, you're then looking for this. Something similar to what you just had right here. You see that? Something similar. Just take it. Okay, just like that. You put it over here. I like the short side. I like the short side with the risk. You have about 80 pips risk. It's a daily chart. You have about 80 pips risk or more. No, I'm sorry, more. 200 pips. No, 180 pips. 2%, guess what? One micro lot, right? Want to do two? That's fine, but I would keep one micro lot. I would keep the risk up to here above this whole area because the market can still dance in this. I would keep your risk at 1.34. 1.34. So you got about 180 pips worth of risk. 2%. Okay, what's that say? 1 micro lot. If you lose 20 bucks, 18 bucks. Okay, you get the point? You see what I'm saying? You don't want to get yourself low. If you want to do 2 micro lots and scale out and you risk 4%, that's up to you. I bet the market will go down before it goes up there. So this would be a D point, okay? A to B, C to D. All right, A to B, C to D. That's what you're looking for at some point for this market to come all the way down here. So you're risking 180 pips of risk for potentially 3,000, okay? Or for whatever it is down there. So 1.331, risk 1.34, target down here 1.273. Of course, you're going to peel out some here, like we discussed. Should the market turn, like I told you. Oops. All right. We'll just do that one more time, okay? Yeah, it's not cool, you know, your phone's getting blown up and off, you know, out of nowhere. People using Facebook as a phone, like, hey, buddy. Like, I'm not your buddy. I don't know you. So it's weird. All right. So your 38% is always important. Your 62 and your 100%. Let me just get you, let me get you a link. Okay. Let's go to the next one. Let me see if there's any questions. Hey, Nelson. D-Chun. Okay, oh, my Periscope? Hold on a second. I'll put my Periscope in there. I didn't put it on tonight, but I'll put my Periscope in. It's on AD, it's on my Facebook. And you better hurry up before I take it down tonight. I don't know what it is. Periscope.tv iMarkets Live. Okay. I was at the Paris Hotel before, having dinner at the Eiffel Tower. Never been there before. I just thought, you know, show Paris some love. Okay, so what do we got here? We had looked at this during the week. My team, we had looked at this XABCD pattern. Right here, we were looking for, you have a 61% retracement. You have your Gartley pattern, which is right here. And we're looking for this to move lower. So I like the USDJPY currently still to move lower until it tells us differently. All right, I don't have any immediate patterns though. Let me just see. All right, and if you, it's funny, you just go down to the lower time frames, and we're gonna take a little walk down memory lane here. High, low, high, low, high, low, lower high, lower low, lower high. Okay, didn't do it. Lower high. Oops. Lower low. Essentially, what had happened here was here to here is your lower high, lower low. Lower high, lower low. I would not say short the market there, because if you take a look at it, you know, that would be difficult to short it down here. But let's just take a look at the past and see, because you've established a downtrending environment on your 15-minute chart. Alrighty, look at that. Thing's going crazy. When charts attack, when charts attack. All right, so you got your range, high, range, low. See it up there? You see that? You guys see how I've been trying to tell you price relates in degree? Price relates in degree. See that? Price relates in degree. Look at that. Price loves to relate. See down here? You see that little range? Look at that. Watch this. All right. How did I do that? Nope. Here we go again. See that? All right. So just basically know that price relates in degree to prior swings. Let's get rid of all this stuff here, all this junk. I don't have a particular pattern on the USDJPY, GBP, and then I got the AUD, USD, and I know one of my close friends, she likes the AUDJPY. So if you're online with me right now, you know I'm talking about you. I don't have anything on this right now. EURJPY. Let's take a look. How's our scanner doing? What's going on up there? Okay, we still like, as we talked about before, we like the pattern on the EURGBP. We like the pattern this. We like it pulling back, and we like it going higher. We did look at this earlier where the market was down here, then we talked about it going up higher. Still like, no matter what, if it pulls back, I still like this market a lot higher, guys. EURGBP, you want to be on the long side, okay? You want to be on the long side with that. We talked about where your risk should be and everything, so I'm not going to do that again. Right here, we talked about this also, all right? You hit major resistance, pull back down, you're looking for it to go higher, okay? EURJPY, you like your risk down here. So we looked at this already. So, okay, let's take a look what else we got. You know, when you spell it wrong, AUD. Hey, Ronnie, coming to visit me? My golden retriever, you coming to visit me, my baby? Okay, Ronnie wants to visit me and say hello. So let's take the EURAUD. We'll do a little chart work on this and see where we are, okay? So let's take this swing here and this swing here. What do we got here? What do we got? Okay, we were looking at this down here. I guess last week on Friday, whatever, we were looking at this down here. So let me just get this out of the way. Okay, let's take a look at fresh chart. Fresh chart. EUR. Okay. 1, 2. Still giving me that 2 to 3. So you may have an A to B, C to D relationship in here. Guys, hold on one sec. Yeah, I know. All right, so I was actually recording telling her, don't do that. Okay, it's all good. It's all good, baby, baby. It's all a dream. All right. So I'm just giving you the theory right now. A to B, C to D relationship, okay? I'm going to take this away. I want to start looking where support can come in. This is how I typically mark up charts. What you guys are seeing is how I typically mark up my charts. I look at zones. I start to try to establish where support can come in and where the market should stop going down. All right. I start with a data point, recent data point. I can come down here, but right here, this was that impulse up. A lot of times you get that impulse up, then it creates those harmonic patterns. So we're going to look at that, okay? We are going to look at that together. If I was to look at an XABCD here, that's the low that came in place. That's the lower high. And now we're bringing it down. So this right here, if you look at it's 50%, and right down here would be an 886%. Whatever, okay? So we're establishing the fact that this is possibly a potential bat pattern. Okay, and move all this over. All right. Okay, we're establishing the fact that this is a potential bat pattern. What we also want to establish is this swing right here. What's happening in this swing that tells us that the market can stop going down at some point? Remember we talked about earlier, those three drives, those three pushes down. All right. 1, up, 2, up, 3 drives. Okay, that's what we're looking for. All right, that's what we're looking for. We're looking for those three drives down. So you have 1, 2, 3 efforts to the downside into support. Okay, what you have here, EURAUD, is an area of support. Should it start coming back above the 786 right here, that's going to trigger longs. Should it get down to this area, that would also trigger longs. Let's go down to a lower time frame. Let's go down to a 1-hour chart. All right, 1-hour chart. What's the market telling us here? Remember what I told you guys. You want to have this, all right? You want to have market come down, right? Come to your zone, come up, right? Come back and turn up. And that you always want to look at this. What do you see here? Market up, market down. All right, market down. And you're looking for this, okay? What I would do right now is keep an eye on the EURAUD. And see this little trend line here, right there? That market gets back above, well, even a 786, as we were just saying, above 1.512, you want to get long, and you want to put your risk down to 1.499, okay? Or 498 down there. So trigger points on the EURAUD is 1.51 right there, basically. And your stop is going to be down here at the low, 1.49748. Let me see if you have some questions. Okay. So, how we doing, guys? How we doing? You guys learning? You guys having some fun here tonight? Newbies? All right, you having some fun learning? I know everybody can't stay the whole time. I mean, we go for almost 2 hours. It's a lot. It's really a lot to take in, you know? Good. All right, we do this live every weekend. Invite your friends. There's no charge for it. You know, share the link, share the love. You know, this is my trading exercise because, quite honestly, it's, you know, you have to think of it. I'm in the market so long that I get away from the basics. And I try to stay in the basics. And doing it this way keeps us with the basics. It really does. It keeps us, our nose to the ground. It keeps us in the basics. So that way I'm not doing anything so I'm not, getting esoteric or anything. So it's a good way to stay with the basics. Let's see. I know Caesar likes, I know my friend Caesar, he was liking the GBPCAD. And we had given this, I think, last week, right? We had given this last week on the short side. This whole area to the shorts. I think we were looking at that 2 weeks ago. Last week we were looking at that. Nice, Christopher French. Raina Leone. Raina, don't forget, if you could, tomorrow we have that meeting at around 12 Eastern. Do me a favor, just contact me right before, okay? Brandon, nice, Adam. God bless you. We have a beautiful group out in the Czech Republic that has been coming on with us. And back in 1994, like I said, I was in Amway, and they went to the Czech Republic. They were opening in the Czech Republic. And our upline ambassador, his name was Bill Britt. He had the biggest organization outside of a guy named Dexter Yeager. So Bill pretty much had the largest organization. His organization is larger than Dexter's outside of him, essentially. And the guy was making like $50 million a year, some crazy number, And he was going to Czech Republic to open the markets, and I went there. And I went there with my translator, a guy who I just put an ad out there, And I went all over Czech Republic. I mean, every place. I went all over. And the most beautiful time I've had in my life. I can never forget the fact that, just Czech Republic, you guys, and this group is blowing up. I mean, they've come in with, it's like over 100 people in a week already. They're just blowing it up for the network marketing side. And I'm not talking about the network marketing side here. I'm just talking about what's happening because I see Adam and his group, and these guys are learning. And God bless them. Look, what time is it now for you? 4 o'clock in the morning, Adam? What time is it, my brother? It's got to be 3:30 in the morning. You're hungry, all right? Your team's hungry. I'm going to feed you, all right? And, it's just amazing. I went to so many different places around the Czech Republic. The most beautiful people in the world. I got stories from there. It's just brings back memories, and I can't wait to go back. So anybody have any other charts they want to, anything else they want to look at? EURGBP. I'm on it, Carlos. You say EURGBP. I say I'm on it. GBP. We're recording this, so I'll send it out to everybody once it's done. What the? Okay. Well, this is essentially right here what we're talking about, right? The EURGBP, where you have the harmonic pattern formed. All right. This is where we have the harmonic pattern formed, and I'm liking that pullback. I'm liking this pullback for the long side. I'm liking this. Okay. This whole pullback, I'm liking this. So we've been talking about it for the past, I guess, hour or two. I like this pullback down, and I like you keeping risk of, okay, look, you have 30 pips worth of risk, 20, 30 pips worth of risk. Keep your risk at 2%. So if you have 30 pips worth of risk, 2%, all right, what's that give you? Seven micros, right? 7 micros. So 7 micros times 30 pips is $20 of risk. 20 bucks into 1,000 is $20. I don't want you blowing your accounts up because you're trying to be like the other guy on Facebook and your friend is putting crazy leverage. Look, I want you to be around a long time. So I have no problem you guys going in with 7 micros, 6, 7 micros per 1,000 with a 30 pip risk. You see, you're defining your risk. It's not the pip size. People think it's the pips. You know who does pip? You know who thinks traders are doing pip size? Think that's where it is? It's not, man. It's not. It's the percentage of risk. All right, percent risk on your account. It doesn't matter if it's 100 pips, you know, or 30 pips. It doesn't matter. It's still the same percentage. So let's think about it. If you have a 30 pip risk, you use 7 pips, 7 micros, $20. If you have a 100 pip risk and you use 2 micros, it's $20, 2%. If you want to use more risk, that's fine. I get it. It's okay. You're young, fine. Do it. Have 2 accounts if you want. Don't blow yourself up. Right? So I don't mean to sound like your dad or nothing. I look young. I'm 50, but I look young, so I'm allowed to still talk young. Okay, I'm not giving up my youth just yet. Never gonna happen. I'm gonna be like 80 years old. So okay, listening to Biggie Smalls. So I like this to the upside. I really do. I like it. It's not getting down here. It's trying to hold. And if this holds right here, like that, you see that? If that turns up, we never got down here. This is called the truncated 5. This is where that 5th, where it just didn't happen. A lot of times when you get that in the Elliott wave world, see if I could show you. A lot of times what will happen is it'll come off and you end up getting like this type of action. Well, I didn't mean for that to happen. I pressed the wrong button. Alrighty, we'll just do that again. Whatever. Point is, it'll end up doing, you know, it could become a really sloppy environment because you didn't really complete this whole wave down. So a lot of times, so you'll get that big move up, but then it'll probably go into a sloppy environment overall. All right. So let's see what else we got here. Any other charts? Gold, silver, or oil? Why not? We're here. LaRue, we're here. LaRue's in our LaRue and Mark. You see them right here? They're in the live trading room with me every day, and they see me make the mistakes. Hey Ronnie, what do you want? You want the USDCHF? You want to be like Nelson? You can't be like Nelson. You want to be like Nelson? All right, we'll do the USDCHF first. All right. You see, my golden retriever, she's getting a little pissed off at me now because I'm taking up her time. She's like, all right. Come here, girl. Come here, baby. Okay. So what we talked about the other day, actually, oops, let me get this done. Jesus Christ. Okay, hold on a second here. Man, I tell you guys, I need to go to etiquette school. I have one of our guys. He's in ministry school, and Chris, you know him. You've been talking to him. This guy Matt, and he's going to ministry school. He's a phenomenal individual. I love this guy, and he calls me up. He prays with me, and I start talking and cursing. It's like, I just sometimes he forgives me every time. He's like, it's okay. Once in a while I slip, just what it is. So I want to show you something we talked about last week, and even you can bring it up again. When you see the market, because it's still here, when you see a market that gives you such a huge move to the downside or upside, it doesn't matter the time frame. When you have such a huge move, the market tends to go into this triangle process, and much of the time you'll have completing 5 waves of the triangle. You see that? before it breaks out. We talked about this last week where the market came down and we were looking for a breakout. Okay, we expected it to come from here down, and then we were looking for it to break out going forward, and that's what we were. So we haven't looked at this in a few weeks, but I want to show you that first wave up. Okay, when you see this in a range, when you have a range, when you see A, B, C, D, most of the time the next wave will be 1, 2, 3, 4, 5 going in the opposite direction. Or you can have 1, 2, 3, 4, 5 going one way, and then A, B, C, D going another way, which brings me to another point. All right, which brings me to another point. So we talk about Elliott wave, right? We talk about Elliott wave. In theory, it's great, but you want to also know, let me see if I can get this here. Here it is. When you're looking at Elliott wave, and we always talk about buying that 2-point, like you want to get that higher low. A lot of times you get that sharp retracement down and then it runs. The next retracement down from that 3 to 4 will typically be A to B, an ABC corrective wave. A lot of times you'll get that. A lot of times after you've completed that 5 wave, what will happen is you'll get a much larger A, B, C. I want to stop right there. And those of you that with me in the harmonics world, in the scanner and everything else, you know that after the 5th wave is complete in an uptrend, you get the large ABC corrective wave, you tend to get these harmonic patterns. Now, harmonic patterns are intended for you to trade them from the long side in a bullish market, not in a bearish market. This would be a bullish market, and when you look at your charts, you want to see this type of structure. So if you're setting up a buy, you want to see the whole entire market in a bullish structure and you're buying it. Now, if you see it's in a range, like we're doing with some other stuff, you can wait for the market to move, but this is the ideal situation, is you want the harmonic pattern to basically be in a bullish structure. So USDCHF, let's go back here. Here's what I see, all right? Here's what I see. I see the market is trading to the upside. It's an obvious. And all you want to do, my friend, is you take your retracement levels when the market stops going up and the market pulls back. Looking for 38 to 50% retracement. So whoever asked about the USDCHF is once this market stops going up, you take this low to this high, put a 38 to 50% retracement. When it gets down there, you buy them. What the market also likes to do is what they call a retest. A retest. Okay, here's a test area. If that market comes back down into where you had prior swing highs, sorry about that, I'm hiccuping, that would be a retest of a prior swing high. See this prior support, now it becomes resistance. So if the market does want to do what's called a retest of prior swing highs, it's now support. It was resistance at one time. It's now support. Same thing here. When this market came up and came down, it hit support. Okay. Market rallied, pulled back, support, up. So what you're getting now, all right, you want to just keep it, you know, what are we getting now? Watch. You're getting 1 drive, 2 drives, possibly 3rd drive. If that goes up, then whatever. Okay, and at some point, you see this thing? Oh my gosh. Let's just put it there. So what you would end up looking for is a retracement back down. And after 3 drives, I want to also let you know that you would look for an ABC correction, right? A, standard technical analysis, all right? 3 drives leads to correction. And all you're doing is laying out your levels. For instance, if that was the high, we would move everything up like that, and that's it, okay? So you have the second, you're looking for possible third, and then eventually start coming down. That's where you look at support. So that person, whoever asked me about the USDCHF, Matt's the guy. Matt's the guy. Becky, Matt's your sponsor. He's the most incredible person in the world. This guy would never harm a fly. So anything doing with gold, silver, oil. Let's take a look real quick. Gold, silver, oil. Gold. Gold. There's gold in the Namar Hills. Okay. We do an example of something there. I don't know what it was. Our live trading room, we do all sorts of examples and stuff. So let's see what we got here. Okay, remember we talked about before? Remember we talked about earlier was that value area? Let's look at the value area. Okay, let's look at the value area. See all this? You know, it's, I'm not sure if you guys realize what's happening there. See that? Watch. Teaching us stuff that nobody ever teaches, okay? Watch. If I could find it. This is the value area. Remember we talked about that. It breaks out to the upside. Okay? I know you guys think I'm nuts with my 5 waves and all that stuff, right? You have your little waves. Okay, your little waves. Right? But forget about that for a second. Market came all the way back down to that area. Okay, let's take a look. You guys understand by just looking at the chart, it broke below value. Prior value broke below, came back up, right? And has been testing this whole area. See, this whole area has been testing. It's not testing here because of this. It's testing here because of what happened in the past. You see that? You could work the long side on the gold. You could work the long side on gold and get away with it and look for a much larger move. Okay? Trend lines are broken. See that? Trend lines are broken. This is all support down here. You know, you got 15, you know, it's like 18, 16, 17 points away. No, that's not right. Let's see. 10, 12, like 13 points away. Big deal. So what you're looking at, my friend, is this, let it pull down, and let us start creating that process on the way up. So with gold, those of you that are looking at it, let it pull down a little bit. It's not going anywhere. Let it pull down. Once it starts pulling down, you work the long side. Even if it goes up here, big deal. I'll tell you what, the further it goes, the better. Let it establish itself. Once it pulls back, you're buying it, okay? Bitcoins. All right, here it is. Bitcoin, US dollar. The biggest pump and dump scheme ever devised. So, do you guys really know what really happened? Seriously? Right here, you know what pumps and dumps are, right? Where they just pump something up and then leave the investors holding the bag. So right in here, you got the Vanderwinks, whatever. They started going on CNBC, Bloomberg. Oh my gosh, these guys were all over. They were taking commercials as in the form of interviews, right? The Weiss, whatever they are, the guys from Facebook that Zuckerberg robbed. So they were taking all these crazy advertising on CNBC, Bloomberg, every news channel. Bitcoin, it's the next thing, and it's going up and up and up. Everybody started buying because they're talking about it, right? They're talking about it, so people are buying Bitcoin. I mean, just naturally. It gets to the point where now it's going higher, and people are telling people you got to get in Bitcoin because it's going to go higher, and it's going to go higher and higher and higher. And it went up from $100, where it was just boring, doing nothing, to $1,000. And everybody got stuck holding the bag. All the volume was up here. All the volume was up there. So everybody who bought Bitcoin at 950 going to get rich. They are now. And here's the best, okay? Market psychology. Market went down, right? Market comes up. We're going to get rich again. We're going to get rich. Bitcoin, it's going to the moon. It's going to 2,000. And they're laughing at their friends who didn't buy it, you know? And it goes all the way down again. And their friends are like, you're a moron, okay? So the psychology. So Bitcoin, let's look at where they are, okay? So Bitcoin is one big giant pump and dump, quite honestly, but it's used for, transactions. But in terms of trading, that's what happened. All right. So let's take a look. Who knows what happened here? Maybe some news. I don't know. It's just obviously it's all funky. But a chart is a chart, isn't it? What did you guys learn tonight? What did you guys learn tonight? A to B, C to D, right? You learned A to B, C to D. You learned that you can take any market on any time frame and just do a simple chart. You learned that literally price, no matter what the product is, whatever it is, likes to look at what happened in the past. So if you take a look here, it's a daily chart of Bitcoin, and a trader would look at it and say, you know what? Relationships, all price relationships. You see that? The market right now, I would say, whoever asked about the Bitcoin, I would say it'd probably go back to about 250, at least. Pump and dump. USD, AUD. Okay, we looked at this earlier. I don't have anything on that. Oil. Ronnie, I totally agree with you. Oh, I totally agree with you. Oh, no. You don't want to bark. Sorry, guys. I got my golden with me, and she's wanting to go out. She knows it's 10 o'clock, and she's getting a little feisty with me. Oil, I still think you have downside. We looked at this last week. All right, come here. We looked at this last week. We have this. All right, you still have downside. You know, I don't see anything right now. You still have downside. All right. All right, guys. I want to thank each and every one of you for coming on tonight and being part of our Night Owl. We went on for about 2 hours and we went through a lot of stuff. And share it. I'm going to upload the recording. Once the recording's complete, we'll put it out in an email. And I know I did a recording, I think it was Thursday or Friday or Wednesday that I did. I have to send that out. But we'll definitely get this done for you. We got about 70 of our people left on here, which is great. It's a nice size. I didn't expect that many. And let's have a great week. I'll see you guys tomorrow in the chat room. And in terms of a message, a positive message, I think the whole night was one big positive message. So the message tonight was a positive message that we're taking IML to a new level. We're taking you guys to a new level of trading, and let the world know we're here to stay. We're here to help, and we love each and every one of you. Have a great night, and I'll email out the information once it's updated. Okay, great. Good night.